This is The Bottom Line. The Bottom Line on 938 Live.
Well, the US dollar has been gaining ground recently amid a divergence in policies by key central banks. The European Central Bank has launched stimulus measures, while the Bank of Japan is maintaining its aggressive monetary easing measures. The US Federal Reserve, on the other hand, will end quantitative easing and is likely to start raising interest rates next year. As such, the US dollar has climbed to new record highs versus the yen and the euro, while also appreciating against the Sing dollar overnight. The global head of foreign exchange at Credit Agricole Private Banking, Travis Teo, tells 938 Live's Travis Teo why there is going to be much more volatility in the market.
Yes, indeed. We believe that FX volatility for sort of the G10 currencies may well have bottomed out in June, and we believe that we will see a pass-on effect from interest rate uncertainty following the Jackson Hole events. I mean, if you've seen in the UK, we've started to have a real flip-flop from Carney, where you...
Mark Carney, right? You're saying Mark Carney, the Bank of England governor.
Sorry, yes, Carney in the Bank of England, yeah. And so the market seems to have itself with knickers in a twist. They're not sure whether you're going to see a rate cut this year, next year. It's, you keep seeing hot, cold being blown onto the fires. But we still believe the UK may raise interest rates first. They're going to be one step ahead of the Fed. And we're starting to see cracks in Janet's stubbornness. We believe Yellen will eventually have to cave in and agree that the data needs to twist her arm in terms of timing. We don't think this is going to be until mid next year.
So in light of all these volatilities, is there a clear trend that is emerging? Could investors be moving into the dollar and supporting a broad-based bull run in that currency?
That's right, Travis. I mean, we spoke earlier in the year, and I was definitely bullish on the dollar, if you remember, and I kept telling my clients, please don't fall in love with the euro. And we're seeing a very, very clear underperformance, and I think you're going to see more and more foreign direct investment flowing back into the dollar. Most people have been underweight the dollar for the last 4 or 5 years on the whole. And now the surprise of the year has been the dollar has been the safe haven go-to currency, even performing better than gold.
Right. Davis, I'm back home here in Singapore. What's your call on the US dollar Sing dollar pair by the end of the year?
Singapore has been a really strong currency against the regional pairs over the last 12 to 16 months. Remember, the Indian rupee has been really, really falling. The rupiah was having a tough time until the beginning of this calendar year. So the Singapore dollar on a relative basis has outperformed until current levels. But we're starting to see this is negatively impacting growth as wages have moved up and you're seeing less tourism and revenue coming in from foreign visitors. And as such, we're a little bit defensive on the Singapore dollar, and we believe that it's too highly valued. And we believe that this could lead to a gradual move back towards 127, 128 towards the end of next year.
Travis Teo there, who is the global head of foreign exchange at Credit Agricole Private Banking, on The Bottom Line.